Okay. Um, Harvard Joint Center
Yeah.
for Housing Studies.
So this is just a tack on at the end here. This just reemphasizes the longer term trends of housing demand. This is focusing on the costs of home ownership and how an increasing amount of people are being classified as those with housing burdens. The share of homeowners with cost burdens increasing. The share of older homeowners with cost burdens is growing, and it's also growing among the people that make the less. The lowest income people are the ones that are moving the entire average. It's not just a across the board average. I think that it, as you know, as it relates to us, the implications could mean an increase in rental housing demand. But I do want to say that this increase in housing cost burdens is not a good thing. There are some things that are unique to the home sales market, but there are others that impact renters, home buyers, and investors similarly. I think that interest rates is probably one of them. And whatever, however you dice it, or however you cut it, it's probably going to hit everyone in some way. Now, I do think that discreetly now, and I've been trying to steer myself towards this conclusion. I still don't want to come off of my point earlier about like housing demand is housing demand. I think that we are starting to get into a situation where renting makes sense more than home owning, where maybe people stay renters for a little bit longer instead of choosing to own a home. It's a this is a hard point for me to make because it's so easy for others to make, and I want to be contrarian a little bit because, but I do think that it is just increasingly all of this pressure on the home buying market, all this pressure related specifically to interest rates, and the fact that we've had so much supply in the apartment market, and the rent growth was basically zero, and home price growth was going up. That's got to make more sense, and it's got to support more rent growth or more rent demand than there is home buying demand. That's just like the simple fact of it. However, I also think that like these signs of pain in the home buying market, because they're connected to so many different places in the economy and could be caused by things that affect renters and home buyers like interest rates or like the job market, so it's hard to separate it out. I do think there is an effect just because of the changed conditions. Home buying price up, renting not up. So like that mere fact
Yeah.
does naturally make it seem like there would be more renter demand. But who knows? Maybe everyone just wants to buy a home and they can't get enough of
Well,
them.
and there's two sides of it. There's one, it's not an option. It's just they may consider purchasing a home. You look into it, and it's like I don't qualify.
Yeah.
I'm priced out of the market, and at some point you just give up on looking for a home. There's other folks in the interesting category of preferring renting
Yeah.
to owning, and where this is the renters by choice, which is a smaller and smaller group as the unaffordability creeps up and up. But the idea of I like the flexibility of renting.
Yeah.
I don't want to lock myself in for they say only buy something if you're going to stay there for 5 years as like a general rule of thumb. A lot of the younger generation, they are not sure what they're going to be doing next year.
Yeah.
And they really like the idea of being able to either stay and maybe you have to have a little bit of a higher renewal price or be able to move and shop around. I don't like moving, but that flexibility, I've heard it from a number of whether millennial and Gen Z, that they just like that idea. And then you bring in like the financial aspect of it's not just a pure lifestyle flexibility or I can't afford it. It's like it's a savvy financial move.
Yeah.
Of
If you invested instead of
I don't it's of like I'm investing elsewhere and I've got flexibility and I'm able to have whether it's liquidity in the stock market or crypto, or I'm taking my money and I'm investing in another piece of real estate.
put it in the syndication. That's right.
Put it in a multifamily syndication, or they're doing their own. They're buying a rental house, a duplex, or whatever. But that's an investment property.
Yeah.
And they're going to rent over here, and they're going to generate income over there. I know people like my sister-in-law. Her boyfriend. They live in my sister-in-law's apartment, but he has a house that they rent out.
Yeah. Interesting.
So I mean, it's again. I think people are decoupling, the American dream, again, as we've talked about, to the single family home, which they've been completely coupled together as one. And, maybe there's an opportunity to grow, other opportunities to grow wealth without having to, buy a home. But it all looks what you're trying. It all comes down to what you're trying to get out of life, lifestyle. If you want your own backyard, you want to have a garden, you probably have to buy a home.
Yeah. It does look now to come back to the topic of the article. So yes, there are cost burdens for home buying right now. And the peak, I think, was in the years preceding and following the Great Recession of 2008. I think we're gradually headed up to those levels, but we're not necessarily there yet. We're about 24% have cost burdens, and the peak was 30 to 31 in that 2008 era. We're kind of halfway between normal and in the 2008 era. It does look like we are heading towards a long-term trend of increasing cost burdens. So I don't know if this is going to fall fast, keep growing, or whatever. It's part of my thought that like maybe there's some growing softness in the home sales market just because so many of these people are cost burdened. But as we saw in the Fannie Mae report, that proved me exactly wrong. Home price growth may be slowing, but the prices are just going to keep growing. Yeah.
I mean, the only catalyst that could change that if all the baby boomers decided that they're going to move out and sell all at once. They want to age in place, as they say.
And ultimately, this is, again, just to put like a cap on this, the reason why I picked this and the framing that I want to do for this Harvard Joint Center for Housing Studies is just to say, like, this is another sign of persistent long-term housing demand. Housing demand is here. Housing demand is not going anywhere. Housing demand is going to remain tomorrow.
And again, long-term fundamentals. If what you're saying is true, is that, if the average American is going to face continued pressure on housing costs, there's only going to be more renters.
Yeah.
There's only going to be more renters. There's only going to be more demand for rental units, whether it's single-family homes or apartments. And that comes back to this clarity over the long term. And what does the world look like in 5 or 10 years?
Yeah.
And again, just paint me the scenario of where, and again, sometimes investing in apartments or like investing in gold or whatever it might be is a hedge against the downside that also can perform in normal environments. And we're not saying that society is perfect and the way that the housing market is perfect. It's acknowledging just some of the realities of life, and that this trend, call it wealth inequality, whatever you want to call it, is probably not going to turn on a dime. Show me the evidence where that happens.
Yeah.
Paint me that picture. And most people would say it's pretty damn unlikely.
Yeah.
If we realize that, that's where the investment thesis for multifamily makes sense over a longer time horizon.
Yeah.
And then we can get granular on the near and medium term stuff too. But I think we're going to have more renters over the next decade than less.
Yeah, I think so too. And when even just looking at like household formation and these longer term demographic things, we are in the midst of this big gradual demographic driven population of renters that are growing, and it may recede, past the next 5, 10, 15 years. On the other side of that there may be a different answer, but right now we are in the thick of it, and it's not going to go away anytime soon. Just like it took so long to kind of ramp up. We're just starting this, and so it's going to be a long time to recede.
Yeah. Well, again, hop on over to graycapitalllc.com/newsletter. Sign up for the newsletter, and then as soon as this report drops, will be shortly be delivered straight to your inbox. Again, it's packed full of summarizing really the macro fundamentals that are driving our multifamily investment thesis, and learn why we're excited to be buying multifamily even in this period of uncertainty. We've got a new investment opportunity that's out on the Gray Capital portal. If you're a accredited investor, again, hop on over to graycapitalllc.com to learn more. It's a beautiful, it kind of falls in that latter category of new developments that, where's their value? Well, we're buying it at an incredible price, and we're going to get some good cash flow all at the same time, which is exciting. If you'd like to learn more, again, join us. Sign up for the Gray Capital Investment Portal. Schedule a meeting with the team. You have to be an accredited investor, but assuming that you are, we'd love to have a conversation. All right, we're on to the next. We'll see you next week.